Hi Abraham, it's good to speak to you again.
Hi Robin, what are we looking at this time?
Well, in this episode, we're going to hear from one of the most highly respected financial journalists in Britain. Paul Lewis has presented Moneybox on BBC Radio 4 for almost all my adult life, and that's a very long time. He's now written a book also called Moneybox, and it's a very good read.
So what does the book cover?
Well, it covers a whole range of topics from saving and investing to insurance and funeral costs, and it looks at every stage of life. We spoke to Paul at his home in London and started by asking him about his motivation for writing the book and what he hopes it'll achieve.
I wrote the book, Moneybox, because I've been writing and broadcasting about personal finance for nearly 40 years, and I wanted to give people a guide, not just to the facts and the figures, but to the way the whole finance system works, so that they'd be prepared to be cautious about things and they'd know what traps to look out for, and to try and explain some of the complexities. And what I hope it will achieve is really what it says, that it's a guide from the age 0 to the age 99, so it covers everybody, and apologies to the 100-year-olds, but they'll make use of it too, I'm sure. I hope that people of any age will read it and get something out of it to help them be better off.
A recurring theme throughout this book is the importance of trust. Consumers, Paul Lewis argues, are generally far too trusting of the financial services industry.
Most of the financial service industry is, of course, honest. I'm not saying anything else, but a lot of it confuses people, and I think sometimes deliberately confuses people, because their job is to make money out of your money. And very often they don't make anything useful, like a bookcase or a television or a car. They make money out of money, and it's your money they make it out of. So that is their purpose in life. And of course they'll be friendly all the time they're making money. So you can't think of them as a friend. They're not your friend. They're a business. They're there to make money. And you have to be very aware of the things they might do to take money off you. Not illegally, though of course I do deal with fraud and criminals, because a lot of those about as well. But the regulated financial services industry is there to take money off you, and very often it takes too much off you. There are organisations within the industry that are trying to make things better for consumers, like the True and Fair campaign and the Transparency Task Force. But they really, in many ways, when I look at what they do, they're fighting a losing battle, because the industry doesn't want you to know a lot of things. The True and Fair campaign wants charges, for example, to be completely clear, so when you make an investment you know how much it's going to cost you, whether it's for all the different things they take off and for their profits and all this kind of thing, and the cost of buying and selling shares, the annual charge. They're very hard to get down to. There are even laws that say they should tell you, but they're not very clear, and the True and Fair campaign wants them to be much clearer. But when I look at charges on investments, they're not clear to me. It's very hard to work out exactly how much will be taken off your money. It's like there's lots of little taps at the bottom of your pot where your money is that other people have control over. So I think what they're doing is good, but I don't think it will ever make the industry completely clear and transparent about how much it costs you to invest.
Like me, Paul Lewis is a journalist. Although there are some excellent financial journalists out there, his advice is to be sceptical about articles that appear to recommend a specific type of product or course of action.
If you read the financial pages of the newspapers, and if you go online, you'll find lots of tips about what to invest in, and particularly at the end of the year or the start of the year they're saying this is what you should do in 2023. They can't be trusted because nobody knows what's going to happen to stocks and shares. People who knew what shares were going to go up this year and what shares were going to go down would be making money. They wouldn't be writing in a newspaper. So you can't trust those tips, no, generally. And if you want to invest, the safest way in the long term is to buy a fund that just tracks the whole market, and in the long term you will do better than anyone's tips. So I'm not saying those people are trying to deceive you, but like astrology, treat it like a bit of fun, because they cannot predict the future.
So Paul says financial consumers should be very wary of acting on anything they read in a newspaper. But far more dangerous, he says, is social media. Here is one of what he calls his golden rules.
Never, ever, ever trust financial advice you get from social media. A lot of it is written by people who don't know what they're talking about. A lot of it is put on by criminals who want to steal money off you. There are a lot of tempting offers on social media. It's very easy for young people to become what's called money mules, the idea that it's called money flipping, I think they call it. I'll put £100 in your account and then I'll take out 90 tomorrow and you'll keep a tenner, or it's more likely to be, I'll put £1,000 in your account and I'll take out 990 and you've made a tenner for doing nothing. That is illegal activity. You are money laundering. And if you're caught doing that, then you may be prosecuted, but you will certainly find it very, very hard to open a bank account in future for many, many years, and that will mean you can't get a student loan, for example, and it will be harder to get a job. So it's very damaging. So don't trust get-rich-quick schemes on social media. Don't even trust the advice on social media, because a lot of it is by unregulated people who don't know what they're talking about and are out to take money off you, not to help you with your money. There is perhaps one exception to that. If you're on social media, there are now mortgage brokers and regulated financial advisors who do have a presence on social media. I have a presence on Twitter, and I hope people can trust what I say on there. But make sure that the people you're taking advice from, you have checked them out, they're regulated, they know what they're talking about. They're not people who've got some brilliant scheme to make money quickly, not people who think they know where to invest, and just be very, very cautious about it. And the safest rule is never trust anyone, but if you want to trust anyone, check who they are, what they've done, if they're regulated, and then look at their advice and accept it cautiously, but don't always believe everything you read, because a lot of it is rubbish.
There's so much in this book that I think readers will find helpful, but I'd like to pick up on one topic in particular that it covers, and that's financial education. Paul Lewis says parents have a vital role to play in teaching children about money and helping them to develop good financial habits.
Well, what I say in the book is treat it like sex education. It's important that children know how the world works as young as you think it's appropriate to tell them. And money, you can tell them about very young. I mean, if you give them pocket money when they're young, for example, do it in coins. Now, a lot of people don't have many coins now. We all do everything online. But if you have some coins of different denominations and you can explain how they work, and, a 10 pence piece weighs twice as much as a 5 pence piece because there's twice as much money in it, and it helps them learn about adding and subtracting and paying for things. You can put them in jars, and I prefer jars to money boxes, because money boxes, you can't see inside them and you have to break them, but with a jar, they're made of glass, you can see what's in there, and they don't cost anything. So use jars. One's for saving, one's for spending, maybe one's for saving up for something very special, and they can see what money they've got, and they know when they spend money there's less left in the jar. And that is an important lesson, because when they get a bit older and they get a plastic card, that has no indication how much money is on it. You can take out a plastic card, it can be worth £25,000, or it can have a fiver on it, or maybe nothing at all. So it's important they understand that money has that size. And the research at Cambridge University was that children learn their money habits from their parents when they're about 7 or 8. So they see how their parents behave about money. So it's important that parents explain that to children from around 7 or 8. Mainly, I suppose, because children have got to know now, particularly with the cost of living crisis, that money isn't just infinite. It's not a tap you turn on when you want something. And they have to learn how you manage debt and how you manage paying your rent or your mortgage or your bills, and why you go out every day to earn money. And they've got to know all about those things, and they can understand it at that age.
So, Abraham, let's discuss financial education in a moment. But first, what do you make of what Paul had to say about trust?
I mean, I agree with a lot of what Paul has to say about personal finance generally and indeed about trust in financial services. I think there is a lot of work to do within financial services to keep the trust of the people that we serve. But I am not quite as dark as Paul. If you think about it, the purpose of financial services is essentially about allocating capital in the most efficient way possible. You, as an investor, or even just as a saver, you have capital that you want to put to use that you don't need now, but you need in the future. There is somebody else on the other end of the line who does need the capital for their own use, let's say, for instance, for a mortgage, or companies, businesses who need that capital to grow. And so the job of the financial services is to move capital from point A to B in the most efficient manner. I do believe that the financial services does have a purpose, and actually it's a win-win-win purpose, in the sense that you as the investor or the saver, you will get a return from your capital in the long run. It helps your capital keep up with inflation and to achieve your goal, and the business or the individual get the capital for what they need, and the financial services make a cut in the middle. Now, we can argue, and I do argue, about the quantum or the size of that cut that the financial services makes. Again, one other point I disagree with Paul on is this idea that there are companies who are really doing their utmost to deliver the best outcome for clients. If you think about Vanguard, for instance, a business or a company that we both have admiration for, they've done incredible work lowering cost for investors. We just need more and more of those type of companies.
It is hard, isn't it, to work out who you can and can't rely on to give you good advice, and yet having the right financial advisor is extremely valuable. What advice would you give to people who are trying to find an advisor they can trust?
I mean, most people who are looking for financial advisors will be asking for recommendations from their family members, and that's not a terrible way to start. And what I say to people ultimately is to find 3 or 4 financial advisors to start with, and go out and speak to them. Now, we can talk about qualifications and cost and all these things, and they are important. But to me, one big thing that you should be looking for is, are they more interested in you than they are in your money? Do they spend enough time to understand your goals, your aspiration, even to the point that you might be wondering, why do they want to know all this stuff about me? And then, of course, beyond that, of course, you want to make sure that they have the right qualification. They're chartered and certified financial planners. So I will be looking for a financial planner where, before they talk to me about investing, they talk to me about a plan. They put a plan in place, for what the next, 10, 20 years might look like. And then we get to the bit about money.
As we heard him say, Paul Lewis is a strong believer in teaching young children about money. You're a parent yourself, Abraham. What are your thoughts on that?
I think it's really, really important to educate kids about money, about earning money, about spending money, about saving and investing money. Paul talked about using real cash to teach kids about these things. I think that's a good idea. I have to say, I am more inclined along the lines of teaching kids about the world that they're going to live in, and indeed the one that we're living in today. So we use an app called Go Henry. So our 11-year-old daughter has her own Go Henry account. There are others like Rooster Money, which is provided by NatWest Bank, I think, and essentially it allows you to give them some sort of pocket money and to check off different tasks that they have to do to earn the pocket money. And actually, our daughter's quite good at this, in the sense that she will create different pots of money for the things that she wanted to do. And so, I think it's really important. And beyond that, I'm a big fan of teaching kids about investing. So, our daughter, we set up a small, child's ISA for her. Of course, we invested that money, in low cost, globally diversified mutual funds. And I did spend time to educate her about what this account is about, what's in the mutual funds. And then, next she asked me how she can invest directly in Google or Apple or Facebook, Meta, whatever it's called. And I kept saying to her, look, they're already in your portfolio through the mutual fund. We let her play around with individual stocks, which is a bad thing as an adult. But I think that it's important for kids to really understand money, to understand earning, to understand investing. So anything that we can do as parents to set them, on the right track should be commended.
So, you've heard our opinions. What did you make of our latest interview? Please send us your views. Until next time, goodbye.